I don't know about you folks, but I look forward to these Sunday conversations with my friend Dan Bird. We've known each other 20 years. And I got to tell you, he is on a hot streak. Do yourself a favor, go back to his playlist, look at the receipts that he has been collecting. And we are here. 4,300 is a line in the sand that he pointed at weeks ago, reiterated last week, said it was going to be that point where we need to find out where the market is going. And lo and behold, we got to 42, 98, 82. So Dan, I would call that a win, but now what?
Well, we actually went over 4,300 intraday and then closed below it, which is actually not necessarily a good thing. It's a good thing that we got there.
Right.
But we're here now. We're on the edge of the precipice.
Yeah.
So
it's gonna be really interesting. And again, your thesis, at least coming into this week, and again, it may have changed. You have the right to change your opinion. But a couple of times over the last month, you've highlighted that you think record highs this year is not out of the question. In fact, I might go as far as to say it's your base case. Is that all still accurate?
Yeah, I think so.
I love it. A man who stands on principle. I like it.
We're not going straight up though. So,
well, let's talk about that. So again, we had what I think you called a failed breakout. Tell people what that really means. You've always told me to watch the close, so that's what I did. Right, I'm trying to get better. You're helping me. Right. So tell us what Friday was all about.
Okay. By the way, yeah, we've known each other for 20 years, and it's taken me 20 years to get this good.
Hey man, I'm here now, man. I'm enjoying the ride. It's awesome to see.
It's not something that happens overnight, that's for sure.
That's a good point. You got to do the work. You got to be consistent. There's a big mantra.
Yeah, and it's hard to explain that to people. That, I mean, we've talked about the French analogy in the beginning of all this. Learning French, you immerse yourself in it. At first, you're trying to translate between English and French, and eventually, you just know the French.
It just happens. Yeah, exactly.
And it takes time to get to that point. Yep. So let me show my newsletter first.
Yeah, which people have to read. This is something I consumed in depth yesterday. I actually got 2 copies of it yesterday. Did you do that on purpose?
Yeah, I sent one out, and actually just to my first group of distribution list.
Okay.
And then after I sent that first group, I found a couple of other things that I thought would be really interesting.
Perfect. Okay, that's what I thought, because it did have more stuff. Yeah. Okay.
Yeah, so I put those in there, and I sent it back again to the first group, but everybody else only got one. So.
Perfect. I love it. That's good to know. I'm in the first group. I appreciate that.
Yeah. Yeah. The first 2 groups I have are my friends and family that I've been sending to for years and years. Yeah. And then the other 22 groups are from your channel.
Oh, that's awesome. That's pretty cool to hear. I love the fact that that's that big. So why don't you talk about the market? Because then I want to get into CPI. This is something I have been telling people for weeks and weeks, months and months is coming. We are here now. This is the week where this thing could all change.
This is it. Yes. We'll get back to this chart on the right here in a second. But if you're interested in the newsletter, just send me an email to breakpointtrading@gmail.com and I'll add you to the list. And I don't sell emails or any of that. It's really just for our own internal, really just to share the research I do for myself on Saturdays.
Yep.
So just send me a note. I'm going to talk about these 3 points over here.
Okay.
The caution points as I go through this. But let me show you the first chart. This is CPI. So here's headline CPI, and this is the 12-month rolling window that's highlighted here.
Yeah, they call that the base effect, to use a fancy economic term.
Right, that's the base effect. So the number that we get is based on a 12-month window. So when we get the new one, which will be the first one to the right of this, so the May number, which will be reported in June, then the one 12 months ago will drop off.
Correct.
And you can see there the distance between those two. It's pretty significant.
Correct.
It's much bigger than the distances from all the other ones previously. So what that means is 1 year ago, we had a huge jump in CPI.
Yeah.
And then we had another huge jump, even bigger, the month after that.
Yeah. Well, the important thing about this conversation, because I want to tie this together with what I've been trying to educate my channel on, is the 2 largest upcoming base effect are things we've been talking about for 3 or 4 months because they were always coming. This should not have been a surprise to anyone. But I still think Tuesday comes out and people are going to be shocked when CPI comes in sub 4.3.
Yeah, it might be closer to 4.
Oh, it could be. I just want to be a little conservative. Absolutely.
Yes. Yeah, it might be close to 4. And then the one in July, look how huge that's an even bigger one.
July is bigger. I actually had that backwards. I actually thought June was the biggest. It's July. And you'll see that in the chart you put out. So I won't steal the thunder. But dude, we could be sub 3.5.
Yeah,
by middle of July.
We could be close to 3 by the July number.
And again, if that happens, the Fed will be on pause all year.
I think the Fed's going to be on pause anyway next week.
Oh, it has to be. Oh, come on, it has to be. But I'm saying all year. Wednesdays is a done deal. I'm talking all year.
Oh yeah. It'll be all year. I mean, they will continue to say we are ready.
Dependent.
Yeah, we're ready to start raising again if we need to, et cetera, et cetera.
Well, I want to push back on that because I think I just got you to admit that you had a subtle change. I think it was about a month ago. It might have been 2. You were kind of holding out hope that there might be a cut in December. Have you changed that opinion, or do I have that backwards?
No, that's somebody else.
Okay, all right. Well, I do talk to a lot of people, so I apologize.
I have never thought there would be a cut. The only way a cut will happen is if something really gets broken in the economy. Yeah. I mean, last week we talked about the 3 signs for a recession, and one of those is the Fed starting to cut. Then a recession happens 3 to 4 months after that first cut. I don't think they're going to cut this year unless there's, unless something really bad starts happening and recession is looming and banks start failing left and right. I mean, there's lots of reasons why they could start.
But your base case is no cut in 2023.
Yeah, I think they want to hold it steady, just like they have the last few times they raised like this. They've held it level for a year. Yeah,
me too.
Previously. And I think that's what they want to do this time as well.
Yeah, that's their target. Okay, we agree on that. Very cool.
All right, so this is kind of a better visual.
Yeah, and this is why people have to get your newsletter. I will admit to reading about half of them, but one every month is just like so shockingly good that nobody's talking about. This is an awesome representation. I don't know how long it took you to put this together.
I found this. I was actually, because in my weekly economic calendar, they didn't have a forecast for CPI.
Yeah, it was hard to find. It was
hard to find. Yeah. And I was out searching for it, and I found it here. It says 4.2.
Yeah. Okay.
Down here. But I think it might even be closer to 4. But
yeah, I think
I was out trying to find it, and I found this instead.
Yeah, and what I want to point to here, this is what I've been trying to tell people for 2 months is coming. Once June is here, it's the upper right box. That is how mortgage rates will be sub 6% potentially by the end of August. That is exactly what I've been telling people, almost word for word.
Right. Yep. Yeah, and you can see the 2 big ones. So this first one here will drop off. Now I did put these 2 red, comments in here.
Yep.
But the first one's going to drop off next Tuesday. This huge one right here.
Yep.
And then the next one, which will drop off in July, is even bigger than that.
Yeah.
And both of those, you can see their projection for July is 3.2%. That could actually even hit 3%.
Wow.
It potentially could have a 2 handle.
Could. Yeah. And again, what have I been telling my audience? What happened? So we're going to have these 2 large base effects. Again, I got receipts to go back, but here's the magic. I told you the next 2 months, which are July and August on this chart, that's when housing finally rolls over. Right. Housing is a lagging indicator. We all know it got softer, but you won't see the data till July and August, which will be the August and September reports.
Right.
So yeah, you're right. By then, we could be sub 3%. The only thing we need is time, which is I've been telling people is coming. I'm so excited for this week because it'll finally show people that, you know what, we've been right a lot.
Yeah. Now, interestingly, if you'll notice here, the one after this June, this big gap right here.
Yes.
One after that is actually negative. It's actually a little lower.
We could pop, but yeah.
So that could temporarily make it look like it's going up. I think housing is going to help on that one.
That's exactly right. That's when
So,
housing starts to roll over. Exactly. So we do have some good news coming, but you're right. That would be the August report. We got to watch.
right.
Yeah.
Yeah, the August report, the CPI will appear like it's starting to go back up again.
It could, yes.
And then the Fed will be talking about, we're going to step back in if we have to. And they're
Yeah,
going to
data
continue to
dependent.
say that anyway,
Yeah.
but
Yeah.
I don't think they will.
Agreed.
So I think as far as the market's concerned, it's going to like it on Tuesday. There's some other things that are causing some issues. Now PPI, this is PPI, which comes the next day on Wednesday. Yeah. That's forecast to be flat again.
Okay.
So PPI hasn't really been dropping the same. So it's forecast to come in flat once again. So we'll see what happens on that one.
Okay.
Now this is the I put this in the newsletter as well. Mm-hmm. These are all the rate cuts. And it's interesting when you put it all together like this.
You mean rate hikes?
Rate hikes, I'm sorry. Yeah, rate hikes.
Yep.
It's interesting when you put it all together like this, because as we've been having rate hikes, and we had 475 basis point hikes, you can see right here. Mm-hmm. And everyone has been bearish and thinking the market is continuing to go down, and people still think it's headed to 3,500 again.
Yeah.
But if you look at this, look at the pink arrows, the first 5 hikes, the market trended down until we hit the October low. And then the next 5 hikes, the market trended up.
Yeah, you know what's really interesting about this? I don't know if you believe this, but there was a lot of headlines in my readings this morning talking about we're in a brand new bull market.
I've been saying that for months.
I know. I want to give you your flowers. I'm just letting you know that the mainstream media has finally caught on to the one and great Mr. Dan Bird. We're in a bull market.
Well, that's always the way it happens. And the reason is, the media, in fact, I'm kind of concerned if the media is saying that.
Yeah, exactly. You're going to get a Time magazine cover, bull market on. Like, whoops, a little late.
Yeah, that's when I'll be afraid we're going to get a crash.
Yeah.
But I do think that we have a pullback in store. So let's talk about that for a second. First off, the CRB, the commodities down here, they've been kind of flat. So these will play into that CPI number as well. Mm-hmm. Besides the base effect, the commodities have, declined or kind of flattened out.
Yeah, they're kind of flattened out, but they are below what I believe was the last period's peak, right? What you see in the middle of the other one.
Yeah, they're below the peak, but the CRB is not below the trough.
Correct.
The trough is that dotted blue line right there.
I'm with you.
Not yet, but I still think they're all trending down.
That's fair.
But they're probably going to just hang out here for a while. All right, so that's what the market looks like. Now let's look at the S&P. This is the long-term chart. And okay, that's the long-term chart. A couple of things to point out. I've showed this many times before. The shaded area is what I've been saying for a long time. This is where we're going to run into a lot of resistance. It's going to be a battle in here between bulls and bears. The bulls are clearly winning.
Yeah. Do you think the battle ensues on Monday? Because right now it doesn't seem like much of a battle. I think the bulls are running over the bears.
Yeah, they are. They actually broke out the top up here.
Okay.
But that candle, if you can see it, it's called a spinning top. It actually kind of looks like a spinning top.
Yeah, and you add this in your newsletter. So again, shout out for people getting the newsletter.
Yeah. So a spinning top, it has, basically it ended pretty much in the middle. It traded higher, it traded lower, and ended. This is a weekly chart, so it ended the week kind of in the middle.
Okay.
That's indecision. That's the battle between bulls and bears. The bulls want to push it higher, the bears want to push it down and hit the 4,300. And that's the, the battlefield basically. So a spinning top like that, especially after a big run higher, is a reversal candle. That implies that we're going to get a pullback. That's one reason why we may get a pullback. Okay. Now this is the daily chart, so this is a closer in view. And now what I have over here, that circle, that's Friday's candle.
Yep.
That is a spinning top.
Okay.
I'm sorry, shooting star, not a spinning top. Spinning top was on the weekly. On the daily, it's a shooting star.
Okay.
So this is Investopedia. This is where I go if I want definitions on things. This has a great one for shooting star. Here's what it looks like. It's exactly what that one looks like.
Yep. So it's bearish.
It's bearish. Bearish candlestick. Long upper shadow. Occurs after an advance and indicates the price could start falling. It's bearish because the price tried to rise significantly during the day, but then the sellers took over and pushed the price back down toward the open. All right. Typically, you want to wait for confirmation, so you want to wait for the second one. I think Monday's going to be fairly flat. Frankly, could be a little bit.
Tuesday. Yeah.
Tuesday is the day it's all going to break loose.
Yeah.
All right. So
5:30.
Yeah. So that's a shooting star. You sometimes can see the same shape at other places in the chart, and it's called an inverted hammer. Not to get too technical here, but
right.
It shows the difference between a shooting star and an inverted hammer. Inverted hammer typically is in context. Shooting star occurs after a big price advance, which is what we just had. Inverted hammer occurs after a price decline and marks a potential turning point higher. But this one is at the end of an advance. So a shooting star means, and you can kind of see it, like this dash line right here was the close, the previous close back here in August.
Oh, wow. Look at that.
All right. So we got above it and then we closed below it. The solid blue line is the high from back in August.
Right.
We went up and just about touched it. Yep. And then reversed and closed lower. And the pink one is the Fibonacci level. This is from the high, the all-time high to the October low. Okay, so that's Fibonacci level. So you can see all three of those are right in that same neighborhood.
Interesting. All
right, so we traded higher. The bulls pushed it up, and then the bear stepped in and said, that's it. We're shorting this market. It's had a nice run, but we're shorting it. Yeah. And I think that's one reason that in the spinning top on the weekly, that's reason number two why I think we are in for a pullback. Now, the pullback is probably going to take us down here to this level around 4,200 or maybe slightly below it.
Okay.
All right. So I think the pullback will take us back down to where we broke out of this little sideways pattern right here.
I see that. Yep.
If that happens, that will be, now the bears are going to say, yeah, that's it. We're done.
That was fun.
The bear bullish trend is over. Now we're headed back lower. And everybody will be coming out of the woodwork saying, that's it, heading back down. Okay. But this, to me, is a very healthy occurrence. This is exactly what you want to see in a bullish trend. Now, this is a failed breakout, so I expect it to come back down. But this is the time when it gets back down here to start looking at things to buy.
Okay.
Because it's going to probably turn around and break out and go back to the highs. This is from Tom Bowley. So the topic of this, and you can find this on stock charts, by the way, even with the free version. Okay. What could go wrong? A lot. So there's the failed breakout that I just showed you that he mentions. The RSI and the stochastics are at the top of their range. Yeah, the RSI still has a little ways it could go. So we still could get, I think we might get a big bounce when we get the CPI number, which would come in even better than people expect.
Yeah.
All right.
Do you think there's a chance it has a 3 on it tomorrow? Or, no, Tuesday. Sorry, Tuesday. Or that's too much to hope for?
What do you mean? It will have a 3.
No.
CPI?
Headline inflation is estimated to be 4.1. I'm calling 4.3. So do you think there's a chance that?
I think
that's too much, right?
I think. Well, I mean, there's an outside chance.
Okay.
We were 4.9 last month.
Correct.
And we dropped from 6.
We dropped from 5. It went from 5.
We dropped from 5 to 4.9, but the month before that it was 6.
Oh yeah, we went from 6 to 5. Yeah, full point.
Right, went from 6 to 5, so we could go 4.9 to 3.9.
Okay. Yeah, not my call, but I was just curious. Yeah. Okay.
Yeah, I think we could, but I think it's going to be much lower than people think.
Yeah, that's where I'm at too, right? I put a line in the sand weeks ago, 4.3, just because of the base effect and commodities. But yeah, I think it'll be lower than people expect, and I think that the open on Tuesday is going to be wild to watch.
Wild. It's going to be wild. And I would expect that this RSI is going to push above 70. Now, 70 is the point where it's overbought.
Yeah.
That's the indication to most technical traders that they should start taking some profits.
Now last week I think we talked about the 7 stocks in the S&P 500 kind of with all the gains. Has that broadened out any, or
yeah, we'll talk about that in the next session.
Oh, okay, that's fine, no problem.
Next session, I want to do kind of a mailbag of some of the comments that I saw on YouTube, and one of them was asking about rotation. So we'll talk about rotation in that.
I like it.
All right, so here's the other thing he said: options expiration, and this is the other reason why, the third reason why I think we're going to get a pullback. So if you've listened to me previously, and options expiration week is usually opposite week, and I said this in the newsletter as well. So whatever direction the trend has been in, options expiration, especially the end of the week and the beginning of the following week,
right,
it reverses and goes the other way. And that's because the market makers who have to make a market, if the market's going higher, they have to make sure that they can be selling to accommodate that.
Right.
But if the uptrend overwhelms them, then they can't sell enough, and it just continues higher. Now this is AMD, and Tom put in the options chain for AMD. This kind of illustrates what happens options expiration week. It's called max pain. So on the left-hand side of the calls, the left-hand column, the right-hand column are the puts. And if you just go down the list and pick out the highest numbers, so there's the highest one right there, 41, almost 42,000. Okay. 42,000 open calls at $110. Now, AMD right now is at 125, basically. Okay. So 110, a lot of people had bought calls for 110. They are in the money at 125, right?
$15, yeah.
15 bucks. But that means market makers are out. Yeah. Market makers have to make sure to cover that. Okay. Meaning they have to short it or they have to sell it in order to cover those calls. So for market makers to make money, or let's say not to lose as much money, right, they would like that price to be down closer to 110 and even below 110 if possible, so that all of these expire worthless. Right. So that's what happens in options expiration week. That's why it's opposite. If the trend has been up, then usually the end of the week, there's selling that goes on. So I'm expecting to see a wild week. I'm expecting to see a lower CPI. I'm expecting to see the market take off on Tuesday. I wouldn't be surprised if the candle we see is similar to this. We see but above, higher than this. Right. We see an open way up here. Right. A gap up, way up here. Right. And then all day it does nothing but sell off. Okay. That's what I think we're going to see. It'll just sell off all day long. Now, so this is a good example with AMD. I can show you AMD right here. AMD, and we're going to talk about this in the next session as well, about a few stocks that somebody mentioned, and we'll look at each one of those. But this is up in the third ATR, average true range. Most stocks, whenever they get that far up, that far extended, will usually revert to the mean. Okay. They usually come back to the center. So for AMD, the center is these two lines right here. The pink line is the Bollinger Band. So you can see the edges of the Bollinger Band. And the blue line is the middle of the average true range. Got it. So the first one is 1 average true range. The next one is 1.5. And the last one is 3. I believe that's what it is. It's 1.5, 2, and 3. So 1.5, 2, and 3 average true range. So the average price that it moves in one day is 1 average true range. So if it gets to 3, it doesn't stay there very often. It usually reverts back to the mean.
Makes sense.
So interestingly, you see where the mean is for AMD?
Yeah.
Remember I said 110?
Yep.
112 is where the mean is. So it could easily come back, and you can see where the next highest one, 42,000, is 110. The next highest one is at 115. So market makers would love to see it come down somewhere between those two so that they don't have to pay out all of that option premium.
Right.
And it just so happens that's the reversion to the mean for AMD.
There we go.
So I wouldn't be surprised to see a lot of the technology stocks sell off. There's already been some rotation in those, been some selling in those.
So I always like to ask this, and of course you don't have to answer, but what are you doing with your portfolio heading in? Because I would call you probably more of a trader than an investor. So are you trading to flat, or what are we doing, Dan?
Right now, I did have some 3x leveraged Russell 2000 ETF.
All right.
So 3x, and the Russell 2000 actually took off.
And you were betting the up, not the down, not negative or inversion or inverse.
Yeah, the up.
Okay.
So here's the Russell 2000.
Oh, look at you.
So back when it was back down in here, I bought the 3x. So if this goes up, 4%, then mine goes up 12%.
12. Okay. And basically what that bet was is you saw, everybody, you saw the other companies than the big 7.
The big 7 were leading the market. The Russell 2000, which is small and mid caps, were lagging the market.
You thought they'd catch up. First, the others break down.
I looked at the difference between value and growth within the Russell, and saw that growth was outperforming value. So that's why I bought into it, because I thought it would take off, and it did.
Okay. Now, have you exited that trade?
I have exited. I have exited up here.
Okay, nice.
Going into next week, because I don't think it's a good idea to be in leveraged anything going into next leverage.
So you're flat going into Tuesday?
I'm not completely flat. I have a few things, and in fact, I have Nvidia that I still have.
All right, but you're not. Those are holds, not trades.
Yeah, that's a hold. Here's Nvidia. Okay. Nvidia's reversion to the mean is around 350.
Okay.
And I actually have another buy order in here at 350. So if it does come down, then I'll buy some more down here.
Okay.
And that's a good point for, a lot of the technology stocks. I think they're going to sell off. I think there's rotation going on. The big thing to watch is, a lot of, by the way, this is a good time to show this email that I got.
Oh, no.
Here's an email that I got, and this is a cautionary tale for anybody out there. It says on June 13th at 8:30. Now, what do we know happens on June 13th at 8:30?
At 8:30 Eastern would be CPI release.
CPI release. They don't say that anywhere in this email. Right? They say one announcement could rock our economy and financial markets. But things just don't feel normal. Disposable income dropped more than 1 trillion. Next week, I'm going to talk about the money supply. Because that's the big thing that I've been seeing also. Money supply has gone down by 5%. It only happened in the Great Depression.
Yeah, it's negative. I mean, that's a pretty big drop. It is the only time M2 has gone negative.
Yeah, I'm going to talk about that next week. Just a quick preview. It dropped 5%, but it went up 20%.
Yeah, exactly.
From the pandemic. So it still needs to drop 15% just to get to normal.
Yeah, exactly.
Just to get to normal. And people keep forgetting that there was a 100-year pandemic. Keep forgetting that little gem.
Okay.
So this is an example of clickbait, right? Repercussions could be far, far worse. Things go as I expect. Many folks might look back on June 13th announcement with intense regret.
Yeah, so it's funny. I love that you bring this up. I'm one of them. I actually have a new quote that I'm asking my audience to put on. It's #OKDoomer. OKDoomer. Yeah. #OKDoomer. Because one of the things you get in social media is doom sells. Doom sells.
Right.
It doesn't help you. It hurts you. So again, I ask audience when they see YouTube videos that are doom or an article from Stansberry like this, just go OKDoomer and move on.
Yes. just delete it, get rid of it. They are not going to offer you anything.
No.
You're going to get more from this channel than you'll ever get from whatever they're going to offer you in this.
No.
And it will be some, pay $1,000 for our newsletter.
Yeah.
But this is a great example of clickbait. It sounds like they know what they're doing, but they don't. They're just using a particular date as a fear mechanism to try to get you to click on something.
Exactly.
Don't do it.
Well, Dan, do me a favor, show your newsletter, which is free, and we will get into the mailbag.
Okay. Here you go. Send me an email to breakpointtrading@gmail.com and I'll add you to the list. And these 3 things I put in the newsletter. The first one is the reversal candle. The second one is options expiration week. And the third one is the rotation.
Yeah.
Which we'll get into in the next section.
Very cool. I look forward to it. Thank you so much.
All right.